which is the mid-cap, or the Russell, the IWM, which sector would you put new money into as a sector investment?
Well, certainly the big caps, the large blue chips
over mid-caps.
Absolutely.
You too?
I would say, yeah, that makes sense. I also think utilities. If you think interest rates have peaked, they're going to move lower. Utilities would be a good bet.
All right, we'll leave it there, gentlemen. Nice to have you on the program.
Thank you.
Thanks so much, Michael Woolfolk and Joseph Lavorgna. We'll see you soon. Let's get to Bob O'Brien. We know what happened the last time the Dow Industrials were at an all-time high in January of 2000. It went straight down from there. Bob O'Brien taking a look at that angle. Bob?
Yeah, Maria, because back in January of 2000, yes, stock prices were at record levels, but so were PE ratios. We weren't paying quite as much attention. However, the folks at the researchers at Thomson Financial have broken down the current PEs to take a look, a comparison with where those PEs of Dow components stood back in January of 2000. Now, some of them are no-brainers. Home Depot, for example, whose price is down 40%, the PE now is 78% less than it was in January of 2000. But on the other hand, some of the big performers, like Caterpillar, whose stock price is up more than 150% in that juncture, its PE has declined by 38%. Intel no longer paying the premium for high-tech PEs. Intel's PE has pulled back as much as 33%, even as the stock itself has come down about 60%. But it's not simply a reflection of the prices, Maria. That's the message. United Technology up 100%, and yet you can see the PE ratio has actually declined. So the conclusion that Thomson Financial has reached here is that even with stock prices at another record level, we're at a completely different fundamental backdrop because of the power of the earnings growth that these companies have demonstrated over the last 12 or 13 quarters. As a result, Thomson Financial concludes there is no bubble this time around. Stock prices could go higher from here. Dylan?
All right, Bob, thank you very much. 45 minutes left in the trading day. We hold these levels. We go out on a new all-time high for the Dow Jones Industrial Average, a 75-point advance there. The NASDAQ, good for 10.
We're talking about how to make money in this market. How do you participate in these gains? Up next, we'll be talking with the CEO of Ameriprise Financial. They're celebrating the one-year anniversary as a publicly traded company. It has been a pretty successful ride. Take a look at the chart. Up next, CEO Jim Cracchiolo tells us his plans to keep that company moving higher.
And then you know this, the Dow surging past its intraday high, but coming up, a conversation with a market technician, a technical analyst, who says we are stealing these gains right now, not seeing everything that he wants to see to support this rally upward. We'll be back with the closing bell live from the floor of the New York Stock Exchange right after this.
See you later.
You're watching Closing Bell on CNBC. First in business worldwide.
And welcome back to the floor of the New York Stock Exchange. A Tuesday afternoon, the Dow Jones Industrial Average setting a new record high here today as we look to close out potentially at a new record high there too. Here's why. Oil prices are at a 7-month low. Oil breaking through $59 a barrel today. That has a multitude of effects. The first one is psychological. Gas prices get cheaper. That is good for the overall economy and the perceptions of consumer behavior. Also, corporations, particularly those that use a lot of fuel, think airlines and other transportations, railroads, do better. The transports today are doing just that. That's a large part of the reason why the market's doing as well as it is today. Boeing's another example, again, in the transportation space, moving up. So oil's ripple is not to be discounted. Why is it down today, you ask? Well, increasing expectations that the weekly inventory number tomorrow will once again show more oil inventories than we've had for some time. We had the same thing last week and the week before that, so we've had a pattern of building inventory. We're at a soft part of the year. Warm weather, no cold weather, but not too warm, so there's not a lot of air conditioning, nor is there a lot of heating. Creates a drop in oil demand, not to mention the driving season is off. So that's the story with oil. That's a large part of the reason why the market's behaving the way that it is today. Let's move to some other things that are going on here. We talked a moment ago about the strength in the U.S. dollar and how the strength in the U.S. economy is strengthening the U.S. dollar. Well, guess what? That is weakening the price of gold. Gold has been absolutely beaten up here of late. You'll see gold prices dropping today, but beyond today, if you go back over the past couple of weeks, gold has been in some form of decline. Also, again, oil-related expectations of strength for the U.S. consumer. Retailers doing very well today, particularly electronics retailers. Take a look at Best Buy and Circuit City. They've had a nice piece of momentum for a few weeks now. Well, the oil story that's being told on the street today helping to drive that behavior too. Maria.
All right, Dylan, thanks so much. Ameriprise Financial anniversary as an independent company today, spinning off from American Express. Now, Ameriprise went public 1 year ago, and it was spun off from American Express. It has been working to establish the Ameriprise financial brand and grow its overall client assets. Take a look at the stock. It is up 37% just in the past year. And as we take a look at where it is right now, we see Ameriprise Financial up 0.75%. Here in a First on CNBC interview, Jim Cracchiolo is with me. He's Chairman and CEO of Ameriprise Financial. Nice to have you with us, Jim.
Nice to be here.
Welcome to the program. First off, you were spun off from American Express.
Half hour left in this day, a little more than that right now. Dow and NASDAQ holding on to their levels. The Dow is a record level as we look at a tale of two jet makers. Boeing, a large reason, again, for the rally in the Dow today. On the flip side, Airbus flying in a totally different direction. More bad news from them today. We'll talk about the two names in just a minute. And there is an ETF explosion here on Wall Street. Exchange-traded funds. Find out just how these funds are actually starting to drive investor behavior across the board. The closing bell going right back on a record-setting day for the Dow Jones Industrial Average.
Every year,
Well, as we continue our focus on Wall Street, we turn our attention now to something called an exchange-traded fund. Chances are you've heard of them. They're proving to be quite popular for investors in recent years. According to State Street, investment companies working to bring about 150
to international funds as well, with the Dow Industrials in record territory. This year, much of the liquidity has come from the corporate sector, but last week we saw a bit of a change. The corporate sector took a breather after months of consistency in terms of stock buybacks and cash takeovers. Take a look at this. According to trimtabs.com, new cash takeovers dropped to a 14-week low of $1.5 billion. And while demand, because you're seeing less demand in terms of new money coming in on the supply side of things, on the other side of the ledger, underwriters actually priced only $2.7 billion in new offerings. That was the lowest dollar amount in 3 weeks. New stock buybacks also falling to a 3-week low of $5.8 billion, although the number of buyback announcements was respectable for a pre-earnings period. So corporate liquidity is stable at this point, but we had been seeing the corporate sector really soar in terms of new money coming into this market. Last week that has slowed down. It looks like individuals, however, are picking up the slack there. Meanwhile, where are individuals putting their money? Dylan mentioned ETFs. International is also a place, certainly, that has been favored. Mutual fund and exchange-traded fund flows look like this. For the fourth week in the past 6 weeks, individual investors sent all of their fresh cash offshore. U.S. equity funds posted an estimated outflow of $100 million, while global equity funds posted an estimated inflow of $950 million. By contrast, exchange-traded fund investors favored U.S. equities. During the past 7 trading days, U.S. equity ETFs issued $1.8 billion, while global equity ETFs had zero flow. Interesting to see really specifically where the money is moving. And today it is moving into stocks. We've got 30 minutes before the closing bell sounds on Wall Street. The Dow up 68 points, NASDAQ higher by about 9.
Oil prices taking another hit today. This amid easing concerns of potential OPEC production cuts and expectations for rising inventories. Should you be taking your cash out of crude? Our energy experts with their take in just a moment's time. And the large caps finally outpacing small stocks in recent months. You'll see the current chart reflects just that coming up. We'll look at whether the current economic climate will help this trend continue.
fourth quarter kickoff. As the Dow runs for a record, Maria Bartiromo and our team of experts look at investment strategies for the final 3 months of the year. Closing bell next at 4 Eastern.
Welcome back to the closing bell. I am Dylan Radigan.
And I'm Maria Bartiromo.
Hi.
Hi. Here we are in the final stretch.
Maria's here. We got 30 minutes left until the closing bell rings. Here's how the markets shape up right now. Dow Jones Industrial Average, good for 69 points. That keeps you in record territory, although not as deep in as we were at the top of the hour. I'll give it about 10 points back. The NASDAQ is stronger for the day. It is so far from a record It could double itself and probably still not be a record. But all the same, it is higher on the day, in the S&P 500, somewhere in the middle. The transportation names, Boeing, sensational performance today, and the utilities and retailers doing very well. And that's really the reason why you see the strength that we do have in the day. We turn our attention now to Bob Pisani. Here's our eye on the floor. Bob.
And what matters today? I asked traders, what's the big issues? The same thing came back. Earnings strength. Big news up, big double-digit growth in the S&P 500 earnings estimates, third quarter and fourth quarter. Second factor, lower inflation. Third factor, you're going to be surprised, the buybacks that go on down there every day. Corporations buying back their stock every single day. The trade's been simple for 6 weeks, out of commodities, into financials and cyclical stocks. Financials, new highs, Goldman, Bank of America, JP Morgan, and here's one at an historic high. Here he is. Jimmy McGuire is here, the specialist for Berkshire Hathaway. 97,400. Folks, take a look.
All-time high in Berkshire. Came into this in 18 years. It's a high. It started at $4,700 18 years ago.
18 years
and
ago.
Here we are today, and it's part of this market that we see here. Hey, hit that. Got it. Take him. Got him. Go. It's part of that market, the factors that we just mentioned. Everything's on go, and who knows where it's going to stop.
We're going to get Warren Buffett down here. This is an invitation. Mr. Buffett, when you hit $100,000 and we're $2,000 away, you're going to come on down here, or we're going to go over and talk to you in your office. What do you think?
That's fine with me, and Warren's going to give me a raise.
It's about time, all right? So listen, the other things moving, thank you very much, Jimmy. Appreciate that. Other things moving today, you heard from Dylan, transports. Take a look at those airline stocks. Oil down 4%. That's the biggest decline for oil, and I'm still checking, folks. It might be a year and a half, 4% to the downside. But airlines like Alaska Air, Continental, all of those stocks doing very, very well today. Maria, back to you.
All right, Bob, thanks so much. Well, a bit of a psychological boost last month for the auto sector as a result of falling gasoline prices, but it was still a mixed picture. Sales did pick up during the month from both a year ago level. Merrill Lynch cutting the oil sector today. Up next, we're talking with the analyst behind that decision. He'll tell us why he is dumping oil stocks.
And then after the bell, the fight against fake merchandise, moving from the back room of shady stores to Target, a major retailer. Details in the second hour of the closing bell with Maria right here at 4 o'clock. And then tomorrow on Power Lunch, live coverage of Fed Chairman Ben Bernanke's speech to the Economics Club of Washington and the question and answer session, most importantly, that will follow that conversation. That begins here on CNBC Live, 12:45 p.m. Eastern Time tomorrow.
Welcome back. The cost of crude oil continuing to fall today, extending a nearly $2 a barrel sell-off yesterday for oil. Oil broke under $60 a barrel today. Check it out, down 4% on crude oil, $58.65 a barrel. Joining us now to talk about the market's recent bearish sentiment regarding the oil patch, Brian Belsky is Senior Equity Investment Strategist with Merrill Lynch's Wealth Management Strategy Group, and Michael Lynch is President of Strategic Energy and Economic Research. Gentlemen, good to have you on the program. Welcome.
Thanks for having us.
Brian, you cut your rating on the energy group today to underweight. Why do you think the group keeps going lower?
We did 3 reasons.
We appreciate your time, too, and your predictions. We've got, what is it, less than 15 minutes left in the trading day.
We are coming down the home stretch here, and we got the market really giving up some of the earlier gains. Dow Industrial still in record territory.
By 4 points.
Just barely.
By 4 points. We may not do this yet. We'll take a look at things as things we know regardless of what happens at the close, we have passed the intraday high, and we're heading maybe for a record close. We'll see if the gains stick. We're going to ask a technical strategist who is skeptical himself just ahead.
And then stay with us, because after the bell, we are watching the Dow Industrials reach new records, right? But what about the S&P 500? Is the broader market far behind, or is the broader market going to be a laggard here? We'll talk about the broader issues for Wall Street in the next hour of the closing bell. Welcome back. Today's IPO news include members of the New York Mercantile Exchange scheduled to vote on a proposal to take the commodities bourse public on October 12th. The move is just one in a series of hot new issues from the exchange industry. The NYMEX filed to go public back on July 17th with maximum proceeds of $250 million. So far, the bourse has yet to set an estimated price range in that IPO, along with the other weeks in terms of the IPO market. Take a look at this one, Riverbed Technology. That was up 57% in its debut. Interesting that it's down today in this strong market. And given that the fourth quarter is historically a strong season for new issues, investors could certainly see a late run for IPOs.
And the interesting thing to watch with that will be how many will list in New York and how many will list in London. We've seen a huge number of issues, as you pointed out on a number of occasions on this show, listing in London because they don't want to deal with the U.S. and particularly Sarbanes-Oxley listing requirements.
And Hong Kong.
Yeah, it's something interesting to watch. Dow Jones Industrial Average right now on the verge of going below record territory. You are just 8 points. You're 8 points into record territory after being 20 and 30 points in. Why is that? Well, developments late this afternoon in Intel causing its shares to decline. The Wall Street Journal reporting today, this afternoon, that the EU may be exploring antitrust action against Intel. Intel giving up the bulk of its gain on the day, at least half of it here. And as a result, you are seeing weakness in the Dow all in. And as a result of that, you are now, again, 4 or 5 points off of that record level after being well comfortably into record territory. So we'll be curious to see whether the Intel deterioration in combination with the weakness in the energy stocks that Maria's been talking about all day will ultimately bring us below that record level after all. All the same, and on the same note, not everyone is cheering for this record high that we've been talking about. Our next guest says he's worried that all the other indexes are nowhere near all-time or recovery highs, and that means we may be in trouble a little bit later on this year. Joining us, Mark Arbiter, Chief Technical Strategist at Standard & Poor's. Mark, what stands out to you most?
Well, I think the strength in the S&P 500 and the Dow and the S&P 100 or the OEX is masking underlying weakness in the overall market. The Russell 2000, the S&P small cap, S&P mid cap, the Dow Jones Transports, and the NASDAQ are all lagging badly. Some of those indexes are anywhere from 7 to 10% from either their recovery highs or their all-time highs. There's been a big shift into large cap, defensive, high-quality stocks, and this is typical at the end of a cyclical bull market.
So the bulls on this rally, and I know that you know this, but the bulls on this rally argue that this rally is different than the last time, and I'm referring to the Dow being at a record, because last time the number of dollars being paid for each dollar of earnings was much higher, that the earnings multiple was much higher, and that this time that the stocks are still relatively cheap. Why are they wrong?
Well, we're also seeing another concern here is that we're also seeing long-term divergences with respect to market internals as well as momentum.
But what about my question about the earnings multiple?
Well, that's more of a fundamental question. I'm a technician.
Okay, so you don't want to go. You don't want to get. You're not going to wade into that pond with me. That's what you're telling me.
No,
I can't blame
I'm a chart
you.
guy.
I'm sorry. Well, so I'll stick you to your knitting.
Right.
The behavior that you need to see to feel like it's a good rally is what?
I would rather see the smaller cap, mid cap, the more aggressive indexes break out to at least recovery highs rather than the Dow, rather than the S&P. That would show a more aggressive stance by institutions. I'd also like to see a more broad rally. The number of NYSE and NASDAQ new 52-week highs has been deteriorating since the beginning of 2004. The number of stocks over their 30-week moving average has been deteriorating.
It's interesting we're having this conversation because as you speak, the Dow has now gone dead to its all-time record closing high. We're at 11,723. We were just 11,722, which is the record level. We could well deteriorate before this day is over. Does that mean anything to you?
Well, from a short-term perspective, maybe so. I'm more of a long-term technician. And like I said, the move into large caps was, I think, precipitated by concerns about energy, concerns about interest rates. We had a big move July through September into consumer discretionary and technology stocks led by the declines in energy and bond yields. And I think that trade might unwind here.
All right, Mark. Thank you very much for your time today. Mark Arbiter with us from Standard & Poor's. And Maria, this thing is going to be right down to the wire.
Right down to the wire, and we are 7 minutes away from the closing bell on Wall Street. The Dow and the NASDAQ giving it up as we approach that stretch.
Energy, as you pointed out at the top, the weak part, and then you add to that the Intel deterioration for the Wall Street Journal scoop. Again, the news is EU looking at potentially an antitrust investigation against Intel. Intel gives up half its gain, and the Dow Jones Industrial Average puts you dead on a record close right now, 1 point away.
Back with the closing countdown next.
It's the year of power and money. From Wall Street to Hollywood, private equity is everywhere. Now it's grabbing a starring role at a major movie studio. From the boardroom to the ballpark, making the playoffs takes more than good players. What you can learn from the business of baseball. Targeting fashion fakes. It's not just the back alleys. Two big retailers battling over a counterfeit crackdown. It's all ahead in the second hour of the Closing Bell. It's the...
Let me show you what the market are doing today, and I'm calling it New Year's Eve again, because that's exactly what it looks like on New Year's Eve. On New Year's Eve, we were hitting new highs in the Dow Industrials, the S&P 500, the S&P Mid-Cap, and the Russell 2000. That is what's happening today. I would note that the S&P 500 is off of its highs, and if it closes here right now, it would not quite be a new high.
0.9 of a point separates us from closing at yet another record high.
Please.
And that was Bob Pisani 6 years ago. You were very clean cut back in the year 2000.
Well, I was 24 at the
And now
time.
you're like real loose and everything.
And now it's, what are you going to do? Now I'm just playing. Come
What
on,
happened?
23, 11,723. That's the closing
What happened,
high.
Bob?
What happened, Bob?
Don't make... What? What
happened?
Nothing happened. It's just drifting
Intel
around.
happened.
We're up and around. Yes, Intel dropped at 330. You're right. That was a factor in moving the market down. But folks, come on. Let's just get the whole... Well, you're right. It did move the market down a little bit. But it was drifting around here. 10 or 15 points doesn't matter. Look, the important thing is the direction of the market is to the upside. That's what's
Listening to you
important.
as we speak. We're now up 4 points.
Yeah,
26.
good. Thank you. Somebody's paying attention. Don't make us come back and do this again, please. 11,723 would be the high. Look what happened today. The financials did very well. The techs were not a major factor. Financials did well. The retailers did well. All the cyclicals did very well. Airlines did well because we had that 4% drop in oil, and that's the biggest drop in oil we've seen in a long time. I think it's probably go back a year. I haven't been able to get the numbers on that, but you probably have to go back a year. So we saw that. We saw the insurance stocks do a lot better overall.
What's happening right now is interesting, because on the one hand, the names that got us here, in large part, at least recently, have been the energy names. They are not helping today. And the names that got us here 6 years ago have done nothing for us today.
That's right. Of course.
Oh, that's what I owe you guys some answers, don't I?
Yeah.
Thank you for bringing that up.
Okay.
Yes, you do.
All right. Top yielding Dow Jones Industrial Average issue, Altria Group. You got it right, Bob. Lowest PE ratio within the Dow Industrials.
Got that wrong.
ExxonMobil, lowest
that.
PE. That's interesting, even though it's the largest market cap. It's the lowest PE on the, hey, nothing changes around here. Bump it around.
We're back to 2000. They did that in 2000.
Sonny gets his record. We go out at 11,727.74
Thank you.
on the Dow Jones Industrial Average. That is a new all-time record. Closing on the average. As the closing bell rings here, it continues right now from the floor of the New York Stock Exchange with Maria Bartiromo.
Look at the good time.
Greg, I'm right behind you, right?
Want to do something?
Hi, everybody. Welcome back to the Closing Bell. I'm Maria Bartiromo here on the floor of the New York Stock Exchange. Right next to me, John Thain, CEO of the New York Stock Exchange, along with Bob Pisani. We're talking about a very good day on Wall Street. And right before, John, nice to see you. How are you?
I'm great. It's great to see a new record high.
Right before we came on the air, you said, what do you think? What do you think? Do you think this tells us anything about the market, that here we are, the Dow at the best levels on record, better than back in the year 2000?
Well, I think it says that the economy's healthy and that corporate earnings are still going to be good, and I think it really does speak to investor confidence.
And Bob, I wonder what you think as far as if this feeds on itself, right? When an investor out there sees that the Dow's at a new high, does it encourage new money to come in?
It's good for investor psychology. I think you're absolutely right, John. Look, isn't the major factor at this point earnings situation? Despite the concern about a slower economy, we're still looking at 14% growth in the S&P 500 for this quarter, 12% for the for the fourth quarter. And John, those numbers haven't come down that much. Earnings is what drives the market, right?
That's absolutely right, and earnings and investor confidence, and I think we have both.
Yeah. What else?
You've got to be happy that as the big cap seeing the money flows, huh?
Oh, absolutely, and that's why you see the Dow, of course, hitting a record high. The S&P is still somewhat below its record high, but I still think it really speaks positively for the economy and for the market.
All right, thanks for stopping by, John.
All right.
Always a pleasure, John. He's getting very good walking into these shots there.
Stock Exchange. And as we told you, our top story of the day, the Dow Jones Industrial Average today, topping the previous all-time intraday high of 11,750. Looks like the Dow Industrial settles out today up 57 points. on the session at a level of 11,727 on the session. Intel, the reason we did have things lose some steam at the end of the day, Intel had been strong, and that was one of the really forces behind this market rally throughout the day, technology and financial services. But at the end of the day, just about 20 minutes before the close on Wall Street, the Wall Street Journal reporting that European Union investigators say that they have enough evidence to pursue antitrust charges against Intel. The stock, as a result, sold off at the end of the day. Take a look at that intraday chart. You will see exactly what happened on Intel. That was definitely one of the bigger stories at the end of the day. Another steep drop in crude oil, one of the biggest stories to tell you about. Crude oil broke $60 a barrel. Ordinarily, this would be extremely positive, not just for the stock market, but the economy overall. The reason, certainly, one of the big reasons that the stock market held on to its rally throughout the session. Crude oil tonight, take a look at where we're ending, down about 4%. Oil futures rallying over $2 a barrel to the lowest, falling rather over $2 a barrel to the lowest level in 7 months. Yes, that level right there, 58 and change, the lowest level in 7 months. Here's a look at where we finished today's trading session, and the numbers are official at this point. The Dow Jones Industrial Average up 57 points, 11,727 on the industrial average, and the NASDAQ up about 6 points. Back with Bob Pisani. You're on the floor, Bob.
Not hearing music. Well, they should be playing music because we're all happy. The Dow hit a new high. Finally, not an intraday and a closing high. A little concerned it might not hit a closing high at the end. We did it, though. And here's the key point. It did it with a lot of help from the financial stocks. Let's just run through some boards real quickly and show you how well the markets did overall. Financials led very early on. Citigroup had a big move early on, about up 1.5%. It held on throughout most of the day. JP Morgan, right near a 5-year high. It, too, was up over 1% on the day. Bank of America, historic high on the day. That certainly mattered very much. Capital One and some of the other stocks all moving to the upside. Retail was moving early on. In fact, it was one of the big movers. Even as we opened fairly weak, Kohl's had great September same-store sales, 16%, way above analyst expectations, and they upped their earnings guidance. Kohl's helped the retail group stay strong all throughout the early part of the morning, even as we saw some market weakness. So right across the board, stocks like Nordstrom and Limited and Target all were to the upside. Airlines benefited from that 4% drop in oil you heard Maria talking about. So Continental, AMR, ExpressJet, all of those stocks moved up. In fact, the transports had a pretty good day overall, up 36 points, although still well below their historic highs that they hit a few months ago. The problem was in the commodity stock area where we saw a lot of investors continuing to head for the Xers. So right across the board, in the aluminum group, Alcan, even though they announced a buyback, steel stocks, the copper stocks, Rio Tinto, and some of the coal stocks like Massey near a 2-year low. Neighbors, take a look at some of these oil stocks as well, the oil service stocks as well. Neighbors, Halliburton, all of those stocks to the downside. Even some of these smaller stocks like Sunoco, all were weak here notably. Finally, the one big stock group moving to the upside, the insurance stocks, as some comments out of the people in Denver who monitored the hurricane season saying that the rest of hurricane season may be benign, and all throughout the day, stocks like St. Paul, Hartford, Chubb, and Allstate all moving to the upside. We were going Sharon Epperson over at the NYMEX. Is that right, Sharon?
That's right, Bob. Well, glad we could contribute to the party here, but here at the NYMEX, traders saying, you know, it's just the whole market looks really weak here. You can't fight this thing. We did see crude prices break first below 60, then below 59. We're at the lowest levels that we've seen since basically mid-February and approaching the lowest levels of the year. If we hit 57, 55, that's the next very important support level that traders are paying attention to. We also saw gasoline lower by about 3%.
All right, Sharon, thanks very much. Energy stocks, meanwhile, fell as a result of the slide in oil prices. Take a look at what happened to the big oil companies today. Down $1.59 on ExxonMobil, a decline of more than 2%. ConocoPhillips losing more than 4%, and Chevron today down about 2.5%. For a closer look now at the Dow's record-breaking rally today, I'm joined by Steve Leuthold, founder and chairman at Leuthold Whedon Capital Management. Dan Chung is CEO and Chief Investment Officer at Fred Alger Management, and Bob Froelich, Chairman and Investment Strategist at DWS Scudder. Gentlemen, nice to have you all with us. Welcome to the program.
It's good to be here. Thank you, Maria.
Dan, let me begin with you. Have you made any changes to the portfolio as the last 3 months has seen money flows come into this market and the Dow reach record highs?
Absolutely. We think the Fed's pause was a significant shift in the market fundamentals, and we've been shifting into growthier, areas of the economy, in particular into consumer, into technology, into healthcare, into financials, and out of some of the cyclicals, in particular the energy sector that's done so well for the past few years.
Now, the consumer move seems interesting to me because aren't we watching expectations rise that, in fact, the consumer part of this economy is, in fact, slowing down?
Certain parts of the consumer economy are certainly slow. Housing, autos, we've seen that. But we think the American consumer overall is actually quite strong, and you're going to see it in particular in certain areas like certain selected retailers serving higher income individuals. Some of the travel sectors look pretty strong after many years of not adding much capacity. So we think it'll be okay in certain areas.
Bob, how do you see things turning out?
Yeah, well, I think this is the beginning of the great rally in the fourth quarter, because I think, Maria, if you go back 4 to 5 months, I mean, if you look, we had the worst of all things going on. The Dow was basically flat, interest rates were rising, and energy prices were rising, and now we've seen a complete reversal. And so I think that sets the stage for a very strong fourth quarter. I actually think we could see a stronger fourth quarter than third quarter, which means you could see a Dow at 12.5 by the end of the year. And I think one of the big surprises is actually going to be how strong the consumer is. The greatest tax cut we got is this unbelievable cut in the price of oil, the price of energy, and I think we're going to have a tremendous holiday shopping season here in the United States.
Well, it has been pretty significant. Steve Luthold, do you think it holds oil prices and continues moving lower?
Well, I guess we're pretty positive about the market. We got in defensive way back in April, and we finally, our work, way to the evidence, turned positive a couple weeks ago. So we're about 68% invested. Our normal is 70% maximum. So I'm optimistic, and I think you could very well see, say, 1,500 on the S&P by the end of the year.
What about oil? Do you think oil has further to go lower?
I don't know. I think that maybe we don't have much in the oil stocks, maybe 4%, something like that. But I think oil's probably going to stabilize somewhere around 55, between 55 and 60, and that'll be very good for the airlines and a lot of other things.
You know, it has been such a wild card, Dan. Do you need oil to keep moving lower to believe that this rally has legs?
I certainly think it's very helpful, but I think really what's really important is that there's been a range set now for oil. I don't think we're likely to see oil above $77, the record that it hit in August. And I think now we're actually searching for where is the bottom range of the range going to be. But I think the economy and the consumer are very comfortable at the levels that we're seeing right now.
What about big caps? Are you putting your money into big caps? That certainly has been the area that everyone's been saying they got to move. And we've seen a bit of a movement over the last couple of days, but is that sustainable?
I think it is sustainable, but I think what's really interesting is that the big caps may be leading the entire market up. The Dow is actually trading at a significant premium to the S&P right now, about 15 to 20% in terms of PE. And nevertheless, the S&P is showing some terrific earnings growth next year, and I think we're going to see the Dow pull up the S&P, and the larger and mid cap and even small cap, I think, should do well.
It leads to the next theme, and you went right into it. Bob, what about that? The Thomson Financial Group is expecting S&P 500 earnings to rise 14.5%, 15% maybe if we're lucky, for the S&P 500 in the third quarter. Does the S&P follow suit here on the upswing with the Dow?
I think it does, and I think that forecast is actually light. I think you're going to see closer to 16.5%, even 17%, because I think it's all about consumers are spending, but more importantly, the productivity numbers of companies just continue to defy all logic, and corporate balance sheets are so unbelievably strong. You put those things together, good productivity, good strong balance sheets, and consumers that are spending, I really think we're going to see a very, very broad market rally as we get through the fourth quarter.
So where do you want to be invested then, Bob? You want to be in the big caps? You want to be in certain sectors? Where specifically?
Well, I will tell you, I think financials had a great run today. I think they're going to continue because I think we're going to see a big IPO market. We're also going to see a big rush for M&A activity. So that's going to help financials. And also, as I said earlier, I really think retail is going to be one of the really big surprises. We got a tax cut coming with this great fall in the price of energy. And I think consumers are going to do what they do best in this country, and that is shop. So that's where I want to be positioned. But also in the large cap, because rates aren't going higher, so that means money starts to rotate off the sideline. When it does, I don't think the money goes to mid cap and small cap. That's nervous money. It tends to go the bluest of the blue chip. I think that's a real bias for the large cap shelf space.
let's say, hypothetically speaking, this market continues, and you guys are right. What do you want to avoid? What is Dan Chung not even going to go near, no matter what happens?
I'm pretty worried about the housing market and the low-end credit, consumer credit companies. I would really avoid those. I think energy is going to be, and commodities are going to be really volatile and not going to make very satisfying investments for most investors. I think you want to be with steady growth companies, whether it's an industrial or a consumer, businesses that have good, predictable kind of revenue and earnings growth. I think the volatile, cyclical companies are going to be really tricky to play.
Steve, you got the last word. What do you think? You agree?
Well, I don't like the consumer staples much. They're pretty fully priced. They don't participate in strong markets, and I'd stay away from there. And unlike some of the other people there, I would be suspicious of the financial stocks, because I think probably later in this year, you're probably going to see rates move up a little bit because inflation fears are going to come back really toward the end of the year.
All right, gentlemen, nice to have you on the program. Great discussion, and we appreciate it. We will see you soon.
Thank you.
Well, the Dow may be at a record, even just barely, but the S&P 500 still has a long way to go. We'll talk about the S&P 500 and what it may take to get the broader markets going here and following the Dow's lead. Then new sales numbers for all of the major automakers out today. We'll tell you who's shifting into overdrive and who's falling further behind. Then Power and Money, our special coverage of hedge funds. Plus, Tom Cruise is doing it. Now, the company that fired him is doing it as well. How Hollywood's private equity partnership is generating major film financing. And Coach targets a retail rival in a new move to protest its profits and stop counterfeiters. You could say this case is in the bag. Stay with us.
You're watching Closing Bell on CNBC. First in business worldwide.